Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Thursday, January 17th, 2013. So this is for Thursday. It's currently Wednesday evening. I didn't do the Tuesday night for Wednesday one because there was actually nothing, absolutely nothing changed in the market except for the fact that Apple went down below, closed down below 500, and we'll take a look. We'll take a look at that. So, and actually nothing happened today. I think it was a very narrow range for the S&Ps. You can see the range up here. I'll make that a little bit bigger. Really doesn't look like that much. This little candle in here finished a little lower than it started. Not, or actually it finished. I think it finished up like 25 cents, quarter of a point. So very little activity. This big bump up, December 31st, has gone nothing but sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, now 12. 12 trading days in January, which basically is all of January because if you count for weekends, and besides, this was December 31st. Anyway, as I say, everything looks, the waves all look up. But I don't like the fact that if we move this out, we can see that all these cash prices that are higher highs, including this balloon up here the last few days, and we see the waves are higher, lower highs. So this yellow wave here, purple wave here, yellow, purple wave here. Same thing on T3, higher, lower, lower, T4, higher, lower, lower. So the only plays really are day trades. Let's see what the, this is the daily chart. Let's see if we can get anything from the 21. 21 is just like kind of flattening out. Just like a tsunami hit, and there's nothing after that. 9 days of trading just flat. All the waves are flattening out. It looked like it was gonna go down and keep on going, but the trading top wave T1 is starting to go a little bit above zero. T2 is still below. T3 is below. T4 is halfway. And T5 looks like it's on its way down. Let's look at some trading, some actual day trading waves for the ES. And we see that that's actually pretty active. Let me put in okay, I went ahead and added a couple, the 8:30 marks for when the Central Time, when the market opens for cash trading. But these are future prices on the ES, and their 24-hour charts on a tick chart of 1597. So you can see if you're just following the waves, right after the start of trading on, let me see, on Tuesday. Okay, so Tuesday, T2 went above zero at 8:48 at 14:59, and if you're just using you can use T1 to get out if you're trading T2, or you can just stay with T2. And that one actually you held overnight, but you got out at 14:65. Okay, you're out. You're back in at 14:63 at 8:55 this morning, and then you're out again at 8:66, 8:67. So, and actually you're back in on the short side, right around 2:31 Central Time at 14:67. And right now we're starting to move down 200. 2 S&P points. All right, so my thinking on this is, let's go back to the daily here, is that, let's get rid of this here. Remove, remove. It's been riding the 8-period exponential moving average ever since it made that massive move up, the fiscal cliff signing. So, you know, we could come out with a major announcement by Geithner that he's going to increase, or the Fed chair, Bernanke, going to increase another $42 billion a month. That would make it $150 billion. So instead of $1 trillion, it would be up to $1.5 trillion. Or it could just go sideways to down, or it could hit this line in the sand, which is 1421, which I've shown you on many occasions, goes back 2 or 3 years. My own feeling is that we're in for a huge hit, and it's not going to be pretty, and it could happen at any time, just like a tsunami overnight, and we could come down to 50% retracement in a heartbeat. We could be down between, this is the 318, the 0.38. We could be down between 40 and 70 points, and that could happen very, very quickly. There's way too much complacency in the market. Let's look at the VIX. Okay, so the VIX is like flirting with really 2-year lows, 3-year lows. Hasn't been this low for a very long time. At least last year, this year, it's already taken out the lows. It's like a 2 or 3 year low. My question is, after there's a 43% decline in the VIX in 4 trading days, there's much more of a likelihood of it snapping back to the 50% area, or the back to where, remember, see where it snapped back up here back in October, and then again in November, and again before it went through at the end of December all the way up here. So there's much more of a likelihood of this snapping back to the 233 exponential moving average, which would put it at 1783, and right now it's at 13. So that's good for 400 to 500 points in the Dow, 40, 50 points in the S&P. That could happen very quickly. There's way too much complacency for this VIX to be down here. This means that everybody's happy and there's no volatility. It just absolutely does not make any sense to me. And you can see that it started to go down on T1, and then it started curving back up again. So you can see the curves on the waves here. They're indicative of a play to the upside. You see the curves on every single one of these waves. The only one that's remaining steady to the downside, and that takes a little bit longer to move, is T5. So it wouldn't take much to get this jackknifed right up to, even on the 21, back up to 1434. So that would be, so this is the exponential, I'm sorry, I got the wrong. Here, this line of bottoms right back here, back in December, would bring us back up to 1555. So just beware. Have some, you know, buy some puts as protection, or just unload some of your stuff. Take some off the table. You've made some great profits in 2012, part of 2013. Don't lose them. All right, let's take a look at Apple, everybody's favorite stock. As you know, this is a daily on Apple. We had a sell on Apple way back at 1665. Actually, I was using a 21-minute chart that rolled all the way down, so it was actually a sell at about 684. We preempted the daily, and the target at the time was five was 513. It actually hit 506, but that target was forecast all the way back from 680 from 680 684. So it bounced back up, bounced off the 233, it bounced off the 377, bounced back up the 233, again the 377, again, and then it just plummeted through support, which was 500 and closed below 500. Okay, so it closed at like this on Monday. I think it closed right at 502, 503, and then Tuesday it went way below. So if you notice the the potential for wave for T1 to move above zero collapsed on Tuesday. So this is basically just a bounce. So upside potential on Apple right now is 519 and change, maybe 520. Oh, okay, 519 and change. Downside potential is it finally, let me stretch this out a little bit, and you can see this line that goes all the way back to March of '09, this trend line, the bottom, the thin white line, I don't know if you can see it. Let me just expand that out. Okay, so this is a line of bottoms. And bring it all the way back. Okay, let's go forward. And whoops. All right. So we are potentially hitting that again, and that's one of the reasons for the bounces. But instead of just looking at the 478 as a target, which I had, and I think it reached 483. So it was pretty close. The next target on this, on its way down, and especially because if you look at T5 right here, T5, if you look at the numbers as they come across here, as I slide this across, every single day they're moving down. And now they went from 7 to 3 to 2. This is the longest wave I have in my arsenal, this blue wave. And when that starts going under zero, this starts imploding. So I believe that it's going to do a dance around this 476 area and then hit the next fib exponential number, which is 459, 460. Let's call it 460. And then it'll do a dance around that, and we'll have to see if it takes that out and goes back to goes down to 368, or if it just bounces for a little bit. So if you want to take let's do a Fibonacci number on this, going all the way back to March of '09, and we see that the 50% retracement is actually at 390. So that's the potential, and it ends up nicely with all these lines of tops from July 2011 all the way to when it got launched on 5 months later on December 2011. So I like that number right here. I wouldn't feel comfortable about buying this to the long side until it hit that 50% retracement number, which lines up with the, let me see, this is the 377, 610. That would make this the 987 exponential moving average. That is a perfect place for this to land, right at around 400, 395. So just be careful. Let me look at this on a big graph here. I know this is probably more than you want to hear, but let's see, daily. Sorry. Okay, so if it moves back up here, it came smack into the 8 exponential moving average. So it may move a little bit higher up to the 21, or it may just start down again. We have option expiration this week, so it could try to finish around 500, and then next week just like slam it to 460. And this is what it looks like on the 610. So basically, your plays on the 610 would be when this moved above zero right here at the close of trade yesterday, and came back up to the this moving average right here when this crossed over, and then you're out, you're back in, and then you're out again. Real simple plays. Let's see if you can do that on the ABC waves also. Pretty much the same thing on the ABC waves. You are in. Well, conservatively, you could have gotten in this morning, or after the open. You would have missed the first leg, but you would have been in at 592, and then you would have been out at 507. Okay, good luck trading, and I will see you at the next update.